Want to build wealth but not sure what you should be keeping track of? Today I'm going to share the 4 metrics you need to know in order to stay on top of your finances and build wealth. Hey, I'm Flora and welcome to Financial Elevation, the place that brings you the tips and tools to spend smartly, build wealth, and level up to financial freedom. In today's video, I'm going to be sharing the 4 numbers you need to know in order to track your wealth. I've worked through this exercise with my clients before, and it's been invaluable in helping them get clarity on where they're at with building their wealth and what they need to prioritize in the future to continue to do so. But before we hop into the video, if you're new here, make sure to hit the subscribe button and hit the bell so that you get notified of new videos that we post every week. All right, so let's jump in. So if you're at the start of your wealth journey or you want to get more organized, you need to have a clear picture of where you're at right now, where you want to be in terms of your wealth, and the steps that you can take to get there. And these 4 numbers will help you do that. So the 4 numbers you need to know are your net worth, your financial independence number, your savings rate, and your cash flow. Each of these numbers plays a role in helping you understand your wealth, and they may vary over time, so it's important to know that this is a continuous process that you're going to want to keep a hold of and make sure that you have a clear understanding of where you're at when it comes to each number. So the first number that you want to figure out to help you understand where you are is your net worth. Your net worth is the value of your assets minus your liabilities, or what I like to call what you own versus what you owe. Now, your assets are anything that have a cash value or cash itself. So things like cash, your investments that you may have made, any equity that you might have in property, or anything else that you can tap into or sell for cash. And your liabilities are anything that you owe money on. So this could be the balance of your mortgage. It could be any personal loans, student loans, or any credit card debt that you have to pay back. Now, it's important to remember that your net worth is just a snapshot of where you are right now in terms of your wealth. This will change over time, so it's important to make sure that you're tracking this, and the number will change based on your income, how much you're saving at the time, how well your investments are doing, so it's important to keep a hold of that. So the next number you need to know is your financial independence number. Your financial independence number is the amount of cash that you need to have saved up in order to sustain your lifestyle without any additional income. I like to think of this as your job optional number. And this value will depend on how much you plan to spend in a year, how long you need your cash to last for, and what percentage you plan to withdraw from your savings pot each year. In the financial independence retire early community, many people calculate their financial independence number by multiplying their annual expenses by the number 25. And this number comes from a study that was conducted by a number of researchers who estimated that you can withdraw up to 4% of your portfolio and that you would have roughly a 97% chance of not running out of money over a 30-year period of time. Now, of course, many of us are living longer and hoping that our savings pots last a little longer as well. So a more conservative approach would be to multiply your annual expenses that you expect when you're job optional by the number 33, which is based on a withdrawal rate of 3% of your savings portfolio. And I think it's a great option to actually use both 25 and 33 so that you have a range over which you need to target for your financial independence number. Before we talk about the next metric, make sure to comment below and let me know what's one thing that you want to work on this year in order to build your wealth. Once you have an idea of where you're at right now based on your net worth and where you need to be based on your financial independence number, you need to understand how much of your monthly income you can set aside in order to build up to your financial independence number. And that's where your savings rate comes in. So your savings rate is the percentage of monthly income that you can set aside in order to contribute towards your wealth. A good rule of thumb is to save between 10 to 20% of your monthly income to contribute to your savings pot. And this should increase over time. And of course, it's important to make sure that you're keeping a good balance between how much you're saving right now and living a lifestyle that you enjoy while saving for the future as well. The last metric that you want to consider is your cash flow. You can calculate this by taking your income minus your expenses over a given period of time. And a good time frame to get a good sense of your cash flow is typically a year. The gap between your income and your expenses is your total savings. So your cash flow can give you a good sense of how much income you need in order to ensure that you reach the right savings rate to reach your financial independence number, and also how to reasonably reduce your expenses if that's an option. And because you're tracking your cash flow over a year, you get better visibility of how you're spending your money each month to ensure that you can live a life that you love while still building wealth. Now, once you've calculated these numbers, you're going to want to make sure that you review these on a regular basis. Your cash flow and your savings rate are something that you could review on a monthly basis, whereas your net worth, you might want to think about reviewing either monthly if that works for you, or every quarter. And then likewise, your financial independence number, you might want to review and update on a yearly basis, depending on what your circumstances are. A great way to keep track of these is to use your spending plan. And you can check out this video here where I actually take you through how to build a spending plan and also give you a free template. Once you build out your spending plan, your cash flow will actually come directly from the spending plan itself, because you're looking at your income and expenses over a year period. And then your savings rate as well will come from the line items within the spending plan that actually outline the savings that you're collecting each month in order to contribute towards your savings pot and also to your investments. And if you're reviewing your spending plan on a monthly basis, this will help you get a really good understanding of your spending behavior each month and where you can make tweaks and adjustments to ensure that you're saving a sufficient amount of money to build towards your wealth and make sure that you reach your financial independence number. Finally, if you want to know what steps you can take to reach financial freedom, I have a 4-page guide to help you get started. Make sure to click the link in the description below. If you want even more tips on building wealth this year, then make sure to check out these videos. If you liked this video, make sure to hit the like button and share with a friend. Thanks again for watching this video, and until next time, keep making smart money moves.